Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are the day's biggest stories. With inflationary pressures continuing to mount, two global research firms now expect the Bangko Sentral to become more aggressive in tackling soaring prices.
The peso finally rebounds, ending 8 straight days of a decline against the dollar.
Outgoing NEDA Chief Chua urges the incoming Marcos Jr. administration to fully open up the renewable energy sector to foreign investors.
And Pangilinan-led Metro Pacific Investments Corp ventures into agribusiness by buying a majority stake in Carmen's Best. We begin our broadcast with the research units of Moody's and Fitch seeing the need for bolder actions from the Bangko Sentral in order to curb inflation.
They say more aggressive rate hikes may also help temper the depreciation of the peso. Moody's Analytics now forecasts the BSP to likely go with a 50 basis point rate hike in August. The research firm says the 25 basis point rate hike that the Monetary Board delivered in May and June stands in contrast to a hawkish U.S. Federal Reserve, which has earlier increased interest rates by 75 bips. Moody's Analytics says higher food prices and a prolonged buildup of supply-side issues are increasing the risk of second-round effects in the Philippines.
Now, for its part, Fitch Solutions expects the BSP to raise policy rates by 3.25%. That's by the end of the year. That's up from the previous forecast of 2.75%. Now, at present, the benchmark interest rate stands at 2.5%. Fitch Solutions says inflationary pressures could prompt the BSP to adopt a more hawkish stance. The BSP has earlier raised its inflation forecast to 5% for 2022. That's from 4.6% previously.
The peso rebounded yesterday, finally snapping 8 straight days of decline against the U.S. dollar. The peso gained over 20 centavos to close at 54 pesos and 78 centavos against the greenback. The local currency opened stronger at 54.93 before losing steam to hit an intraday low of 55.15, but the peso rallied to close at 54.78. Despite this, economists pointed out that the peso remains the worst performing currency in Southeast Asia. While some may jeer the weakening of the peso, the exports industry sure is cheering. But what is a comfortable level for them that doesn't affect their capacity to buy? No better person to ask than the country's leading exporters from the semiconductor and electronics industries in the Philippines. We have their president, Dan Lachica. Dan, good morning. Thank you for joining us.
Good morning, Jess. Good morning to the viewers, Danie, and thank you for having me.
Again, the electronics industry, being our largest exporter, of course, is bound to get a boost from the depreciation of the peso. How much of a windfall is the semiconductor sector expecting from the continued weakness of the peso?
Well, under normal conditions, I would say that the devaluation or the depreciation of the peso is favorable for not only semiconductors, but for exporters also. However, with the rising cost of fuel, logistics, labor, and operating costs, then it kind of negates the traditional, benefits of the devaluation. In the past, every peso increase would probably result in maybe a 1 to 2% increase in revenue. However, as you know, even the power cost, as expensive as it is, has surged much higher. So, in essence, it's been negated, and we're barely, availing of the so-called benefits. But it's not significant. That much I can say.
Are you also looking at possible offsetting here of the gains, at least, from the depreciation of the peso due to, of course, the industry still sourcing some parts externally here, and are there plans at least to localize the supply to somehow minimize dollar leakages here?
We have a parts localization program. We import annually about $30 billion worth of materials, and we've been aggressively trying to localize those. Imagine like if we just localized 1%, that's about 300 billion or over 15 billion pesos. So we're still working on that. However, there are, again, obstacles to doing that, like the cost of operations, even the planned increase, VAT implementation of BIR on local suppliers. That would kind of negate or slow down our efforts. But that's certainly an opportunity that we'd like to pursue.
All right. Sir, are the input costs also going down? Perhaps if you are importing from, other developing economies where the currencies are also weaker, or how is this being managed now? How are you hedging against the currency fluctuations in your industry?
Well, as you know, there's a confluence of effects or factors. There's the Russia-Ukraine war, which has totally upset the apple cart in terms of fuel supply, the shortage of coal supply, even the pandemic, which has increased the logistics cost, the already high logistics cost. So essentially, we are seeing increases in our cost of operations, which are really hard to cope with. Even some of, for example, suppliers of power have increased their prices as well in response to the shortage of coal, if not the increase in price of bunker fuel. So it's really very painful right now. We're still trying to recover from the impact of the pandemic, and yet these factors, notwithstanding the devaluation of the peso, are just creating havoc.
Sir, but are you seeing, for example, in the United States, one of our larger export countries, that the demand is getting better, especially for your products, and that this might be at least a promising or optimistic thing, that their demand is really improving and their economy is stronger?
Well, the demand has always been there. As you know, our electronics exports play into the international global market. And so even during the pandemic, the demand is always there. And it was really a matter of being able to come up with the supply, especially in the context of the shortage of semiconductor wafers. But this demand that we supply comes at the cost, literally higher cost, the cost of logistics, the cost of power, and other operating costs, utilities costs. So, yeah, we expect, in fact, we expect a 10% increase in our export performance this year. But then again, the margins will be smaller because of the higher costs.
Sir, are you not able to pass on these costs to the consumers or your clients? I mean, given the high demand.
That's a very good question. Theoretically, we should, but then again, as competitive as the market is, and when I say competitive, I'm not just talking about companies in the Philippines, but also competitive competition from our other ASEAN neighbors. So we really have to manage those margins, and to the point that the companies have to absorb a lot of these costs to the extent that they can.
Sir, what for you again is a comfortable level here for the peso, for the electronics industry here? How do you strike a balance of a weak peso without affecting your capacity to buy?
Well, as impossible as it sounds, we were okay with the 51 peso per US dollar. I don't even know if I go back to that levels, but at least not this surge to 54, 55 pesos that we're seeing right now.
Now, again, just to shift the conversation here, last time that we had you on the show, we were talking about capital flight here from potential investors over fears, considering that we are putting in place a rationalization of incentives. Do we have updates on that? Has the situation changed, especially given the current conditions that we are in at the moment?
Well, if you recall, as we discussed, we've seen really about $32 billion of erstwhile investments that should have come to the Philippines. And as I mentioned, there were about $400 million more that could probably be moved to other sites. So we're trying to mitigate that. And what we're trying to do is, with the new administration that will take over, or that will assume position on July 1, we're trying to line up meetings with the new government, including the president, cabinet members, to explain the situation and the real threats that we face, especially in the light of the challenging environment that we face today.
All right. And sir, finally, before we let you go, you're sticking to that 10% growth target, which you mentioned earlier on. Sir, give us more color on this. Where will this come from exactly? And does that mean that the sector, to a certain extent, is insulated, apart from, of course, the costs issue, from all the other issues that we are seeing globally, which has hampered the growth of other industries?
Well, the profile of the industry is such that 70% comes from semiconductors, meaning the integrated circuits that are packaged and shipped out. 30% comes from 9 other sectors, including computer or consumer products, office equipment, telecommunication products, renewable energy, etc. So the driving factors would be mostly from the semiconductors, the components, and also demand for medical electronics, telecommunication, industrial products, which are really spurred by the use of data computing, big data, the artificial intelligence, Internet of Things, and IR 4.0. But again, there are still challenges that we need to face. As I mentioned earlier, we'd like to encourage the government to review the incentives rationalization and also to promote the ease of doing business, and also reconcile policies that have, to a certain extent, don't really provide to be helpful to the industry. Like we mentioned about parts localization, and then here you are, BIR imposing VAT on local suppliers. But that not only puts at risk the industries, the local suppliers, but also the employment generated by that industry. Redundant provisions such as BOC's e-track, the electronic tracking system. Oh, by the way, even the vaccination. I think while we seem to be approving general second boosters, but we also cannot relax on that. Today, for example, I read an article that says one popular vaccine, there's data that says after 1 month, the efficacy drops from 79% to something like 50% after, another 3 months, and it's 20%. So I think those are things that we can't relax on and continue to be on top of. Otherwise, we will impede the growth of the industry, if not the whole economy.
All right. Thank you so much for that update. Some fundamentals still very strong, but of course, margin squeezing there, some issues and policy very important at this point in time. Thank you so much, Dan Lachica of SEIPI.
Thanks, Danie. Thanks, Jess. And have a good day. God bless you.
Now pausing for a quick break, but coming right up after that. Transport groups reiterate their appeal to the LTFRB to address their plight as pump prices continue to climb.
More of that and other stories when Business World Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danie, Laurel. Now, pump prices have gone up yet again today to the tune of 50 centavos per liter for gas and a peso and 65 centavo increase per liter in diesel prices.
Now, drivers, operators, and transport groups are renewing calls for the LTFRB to address their ballooning losses. Here's the story.
Bus operators in the metro have limited their operations in light of the sky-high prices of petroleum. In an interview with Radio 5's Ted Filon and DJ Chacha, Juliet De Jesus of the Samahan ng Transport Operators sa Pilipinas said operators have no choice but to reduce their fleet to avoid incurring more losses. De Jesus added that city buses are losing more money over the government service-contracted buses and several LGU's Libreng Sakay programs, which have been causing an overlap in the routes of buses, modernized jeepneys, and UV Express units.
Maganda po yung programa sana kasi sinasagot kami ng gobyerno doon sa mga commuters na sumasakay na nakakalibre. Pero sir, hindi po yun sustainable kagaya ngayon. Nag-extend sila ng July hanggang 31. So busway lang po yung in-extend nila, other feeder routes. Lahat po kami lugi. Wala na rin pong mangyayari. Hindi naman po pwedeng mabuhay ng busway lang ang ino-operate.
Passenger jeeps are likewise calling on the government to reinstate their usual routes. Transport groups like Altodap, Pasang Mazda, ACTO, and PUJ Federation filed a petition to reinstate the routes of jeepneys which was cut and rerouted during the peak of the pandemic. The groups say this is the only way drivers and operators can still earn a living despite the still soaring pump prices.
Nagkaisa po kami na mag-file sa LTFRB na kung saan balik rota na po. Kasi unang-una po, kung makikita natin, level 1 na po tayo. Na napaka nahihirapan po. Nakikita namin yung mga pasahero namin ay nahihirapan na sumakay po. Lalo po sa transportasyon. Kasi ang nangyari po sa amin, yung pong aming mga rota, meron po kami mga rota nationwide na hindi pa napubuksan.
The groups say the loss of direct trips to the destination of their usual passengers has had a huge impact on their livelihood.
Ang nagiging problema po, nagiging 3, 4, 4 na sakay po sila. Mas malaki po yung nagiging pamasahe po nila.
The groups are also asking for a provisional fare increase of 5 pesos, which will bring the minimum fare to 15 pesos at least until the price of oil and diesel start to normalize.
Paano pa ma-approvean yung aming ipinayla fare hike? Alis na sila eh. Tatasan naman yung diesel namin. Wala na po talaga kaming kikitain, kaya nakakahawa po kami ngayon.
The LTFRB has yet to address these petitions as the agency is now in its transition period.
Outgoing NEDA Secretary Chua says the Marcos Jr. administration should consider the full liberalization of the renewable energy sector. Chua explained that this will create a better balance between the, quote, dirty sources of energy and cleaner ones. Energy officials previously said new laws may be needed to relax the foreign ownership restrictions for wind and solar projects. Chua also expressed his support for the new law aimed at regulating and developing the country's e-vehicle industry, as well as the imposition of tax on single-use plastics.
And another one from NEDA, the agency says infrastructure projects of the future need to be sustainable and unsolicited proposals must be aligned with the country's development plans. Now, NEDA said it has already commissioned 13 sector-wide master plans in urban areas nationwide. Undersecretary Roderick Planta explained that these plans will guide the preparation and implementation of sustainable infrastructure development. Infrastructure spending, which has been counted on by the government to drive economic recovery, stood at 5.8% of GDP last year.
In just 2 days, the country will usher in the start of a new administration, and it all begins at the National Museum in Manila. Let's take a look at the preparations for the big day in Marlene Alcaide's report.
With 3 days to go, organizers are making last-minute preparation for the oath-taking of President-elect Ferdinand Marcos Jr. The stage, including the red carpet for guests and visitors, has been set up at the National Museum. Incoming First Lady Attorney Liza Araneta Marcos even visited the venue. In his vlog, Marcos Jr. says his inauguration will be solemn and traditional.
Naku, isa lang ang matitiyak ko. Ito ay magiging taimtim na seremonya. More or less, business, traditional pa rin ang gagawin.
Conducting his inauguration at the National Museum was also a sentimental choice for Marcos Jr. He says he used to fetch his father in what used to be the old legislative building. 3 other presidents also held their inauguration at the National Museum: Manuel Alquezon, Jose P. Laurel, and Manuel Rojas.
Ladies and gentlemen, the President of the Republic of the Philippines, President Ferdinand Romualdez Marcos Jr.
The Philippine National Police and Armed Forces of the Philippines have also rehearsed for the civic and military parade. Security is also now tight, with several parts of Manila already closed off to the public. A gun ban is also in effect in NCR until July 2.
Almost 100% na po yung ating security preparation para nga po sa nalalapit na inauguration po ni President-elect BBM.
As Marcos Jr. is set to start his term, AFP spokesperson Colonel Ramon Zagala has been designated as his senior military assistant and as the commander-in-chief of the Presidential Security Group. For News 5, Marlene Alcaide, we are One News.
Metro Pacific Investments is expanding into agribusiness by taking a big stake in a homegrown dairy brand. Mobile journalist Pamela Vasquez with the story.
Infrastructure and Tollways Group Metro Pacific Investments is venturing into agribusiness. MPIC Chairman Manny V. Pangilinan on Monday announced they will acquire a majority stake in the Laguna Creamery Incorporated, or TLCI, which is otherwise known as the Carmen's Best Group. Yes, the one behind the popular ice cream brand.
My dad told me that he and his friends wanted to stimulate the rural economy, and he wanted to give jobs to people. And we met the group of Sir MVP, and we have the same vision to help the farmers in the provinces. And I feel that it's a very good joining of forces, same mindset, and also coming from a very pure heart.
Aside from ice cream, the company also produces the Hollis milk line as well as various cheeses and yogurts. Under the deal, MPIC will acquire a 51% stake in TLCI following its 198 million peso investment. Pangilinan sees this as a growth opportunity not just for MPIC but for the Philippines, which is heavily dependent on food imports.
The Philippines has had a not totally pleasant experience with agriculture, but it is coming to the fore with what's happening recently in the world, where there have been supply disruptions on the food side, and that's why food prices have gone up and the like. And the Philippines has been increasingly dependent on imports of foodstuffs.
He noted that the country currently imports 99% of its annual dairy requirements. Thus, the investment is also part of the company's efforts to contribute to the UN Sustainable Development Goals, particularly with regard to achieving food security. MPIC aims to transform TLCI into a fully integrated dairy business and expand its reach, perhaps even internationally.
Like as Paco indicated, we'd like to build on what they have as a foundation for future businesses to enhance the brand, ensure that it is marketed, sold, and distributed nationwide. But at the same time, I think be able to one day, in the future, be able to market it internationally.
The transaction values the Carmen's Best Group at 288 million pesos. Once the deal is finalized, TLCI will become a subsidiary of MPIC. Mobile journalist Pamela Vasquez, we are One News.
Globe says it has blocked more than 138 million spam and scam messages just from January to June 15th of this year. Now, the telco said it also deactivated close to 13,000 spamming mobile numbers over the same period. Globe Chief Information Security Officer Ray Bonifacio said the pandemic has been a force multiplier for cybersecurity attacks. He added that the situation is not unique to the Philippines and noted that cybercrime is a global threat.
All right, not a day goes by without those spam messages, and those are the biggest stories on the economic and corporate front today. I'm Jess Delos Santos.
And I'm Danie Laurel. We are One News. Don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us.
All right, Dan, bargain hunting did ensue yesterday as hoped, and Wall Street sentiment spilling over here on the home front as well. How is the Tuesday open?
Well, Jess, that's exactly what Phil Sox did say yesterday. Rose on the back of bargain hunting and also positive Wall Street performance. Although trading remained tepid yesterday, but you can see that spilling over into today's trade, up by 0.15%, 6248.26. But as mentioned earlier on, a lot of people still on the sidelines. Yesterday, we were at the 16th straight day of net foreign selling. Luis Lumingan, he's from Regina Cap, is also saying investors are simply awaiting BBM's inauguration on Thursday. Now, elsewhere, traders are also waiting to see if China sentiment will be improving. Now, that's very interesting to watch. The CSI 300 is up 5% this quarter compared to a 14% drop in global shares. Nevertheless, you can see mining and oil jumping a hefty 1.5% this morning. Now, let's take a look at some of our movers for the day. This is, of course, 30 minutes into the trading day. You can see Converge, a big gainer here, up by close to 6%, followed by Mega World and PLDT. So a couple of telco companies here, but on the downside, you've got Mondenise and JG Summit and Ayala Land sitting out this bargain hunting. Now, I just wanted to take a quick peek at MPIC. Of course, just buying Carmen's Best at 0.6% up this morning. That is, of course, we explained earlier on that they will be spending 198 million pesos for a 51% stake in the group. And this comes, of course, as they already announced earlier on that they may complete 3 acquisitions this year. They did mention they're looking at opportunities in logistics, agriculture, real estate, and tourism. They had already announced their interest in buying Ayala Corp stake in LRT1, but they also mentioned they have, get this, 23 billion pesos, Jess, in net cash position as of April. Quite a lot of money there to spend for some acquisitions. That's according to CFO June Cheryl Cabal Revilla. So a lot of things to be watching out for. Perhaps Carmen's Best is just the first in a string of acquisitions for this year, Jess.
All right, and that's it for today, June 28, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.